Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Let's quickly look at the Nifty first. It's still hovering around 19,700 odd mark. During the session, we did see the markets breach this level as well and trade subdued for the large part of the trading session. So on the index level, it's largely been a lackluster day of trade. But below the surface, you actually see some pockets doing very well. The Nifty Bank has recovered as well. It's now trading in the green zone around 43,612 odd levels. When we look into the sectors, most sectors are actually under pressure right now when we compare, but it's the IT stocks that are doing very well. 0.6% of a trade on the upside. PSU banks, slight upticks can be seen there, and the healthcare part and the mid-cap 100 index as well. But rest of the sectors are actually looking at some pressure being built up right now. When we talk about, of course, the auto space, they are the biggest drags right now on the street. About 0.7% of a fall coming in for this one. FMCG, metals. You also have the realty pack that was outperforming the markets for the first half of the session as well, has now come under the profit booking spree as well. You also see oil and gas and financial services, private banks now down in trade, although slightly off the lowest point of the day as well. When we talk about the Nifty top gainers today, of course, you do have some names like Divis Laboratories that are holding up onto the gains right from the morning trade. Around 36.77 odd kind of levels can be seen there. You also have Bharti Airtel, HCL Technologies, Wipro, Tech Mahindra, LTI, Mindtree. So the big IT pack that's actually doing very well in trade today. ONGC, Bajaj Auto, IndusInd Bank, Hero Moto, some of the other movers in trade. So slight auto majors actually still, doing well in trade as of now right here. When we talk about the Nifty 500 basket, again, you do have some stocks like Amber Enterprises, Cyient, EIH Hotels, GlaxoSmithKline Pharma, which is actually at a 52-week high level as well. Avas Financiers, all of them moving 4.5 to 5% higher in trade. Some of the new made stocks like Nykaa are in flavor today. FSN e-commerce shares are up by 3%. Second day in a row, it's been on an uptrend as well. You're also looking at stocks from the brokerage houses pack like Angel One back in the action today, about 3% higher in trade as well. On the F&O basket, you have Indus Towers, PFC, City Union Bank, SBI Cards as some of the top movers in trade. But let's welcome our guest on the show. Mr. Ambarish Paliga now joins in. He's the market expert with us. Mr. Paliga, good afternoon and thank you so much for taking the time out for this discussion. Well, your own sense of the markets clearly, festive cheer is behind us. We've also had the World Cup nuts now behind us without a victory cheer. But are there any fresh triggers that will help the markets pull up higher in trade, or do you expect sideways kind of a momentum happening? No big Santa rally really?
I think the way we have bounced back from the lower levels, earlier I was quite cautious on the markets, not that I'm very bullish right now. But the bounce back from those 18,700, 800 levels has been extremely good. With a lot of liquidity, and now we are also seeing the FIs also participating to a certain extent. But then what's happening is beyond this 19,500, 19,600 levels, which was a level, which was quite a good resistance, and the market has crossed that. But even at these levels, I'm seeing that the markets are holding on. There's a good consolidation happening. And if you look at the macro news, most of the news has been good. But then I think the next trigger for the markets, trigger could be either up or down. I think that's going with the election, results for the assembly elections in early December. I think that should be the deciding factor, at least, going ahead, at least for some time. So I think it's better to wait for that. And until then, I think one could be looking mostly at the large cap or the blue chips to invest in at this point of time. Because what is said and done, I think, when you talk of mid cap and the small caps, I think there's still a lot of froth because the valuations are still too expensive. But then when you look at the large caps, I think the valuations are just about decent, slightly expensive, but not as much as the mid cap and the small caps.
Fair enough, sir. So wait it out till the time the uncertainty of state elections goes out of the way, till early, December, when the results will be out. And after that, look for opportunities in the large cap space, which looks better valued at this point in time in a risk reward ratio kind of a scenario. Now, when we also have another guest with us, Sudeep Shah, Head of Technicals and Derivatives Research at SBI Securities, who now joins in. Sudeep, welcome to the show. Your own sense of both the Nifty and the Nifty Bank, how would you be looking at these two indices? How would you trade? Sudeep, could you unmute yourself, please?
Yeah. So good afternoon. See, what we're seeing in case of Nifty is that markets have been range bound today. It's plus minus. So the range for the Nifty is the tradable range is 45, 50 points today. So what we are seeing is that post that fall in Bank Nifty last Thursday and Friday because of the RBI circular. Now Nifty wants to go up because IT, auto, metals all have been supportive. Pharma also, but what's happening is that the banking pack is not supportive. So it's kind of bearishness in Bank Nifty and sideways to consolidation kind of mode for Nifty. So what we feel is overall 19,550, 19,600 zone could act as an important support going forward from here on, because 19,550, 19,600 is an important Fibonacci retracement area of the entire fall. So 50% of the, if you see the highs of 20,222 and the lows of 18,837, 50% retracement comes around 19,550. So that makes this zone all the more important. Also, so if you see the options data, 19,700 and 19,600 put writers have been quite active. And on the other hand, 19,750 and 19,800 call writers have been active. So what we feel is overall 19,550 to 19,800 could be the range for Nifty for the next couple of days. And for Bank Nifty, the range could be 43,200 on the downside and 43,750 on the upside.
Okay. Mr. Balika, let me just ask you on specific sectors as well now. One is the IT space that's now performing better. In fact, it's today it's the top gainer, 0.6% higher. We do know that the IT space really was a clear underperformer of the previous Samvat. Are you looking at this space more favorably now? Or do you think the time has come that one can start nibbling into some of the large cap IT names?
I think one can wait at least for a quarter or two more, because the sort of management commentary which has come and the sort of order flows which have slowed down to a certain extent, I think, and the margin pressure which is there, I think can continue for a quarter or two more. So, in fact, I would start looking at, buying IT in the January-March quarter, which is just before FY25, because I see IT performing possibly starting from Q2 FY25. So I think a quarter or two earlier than that should be a good buying time for IT, and not right now, because what we are seeing right now could be just a short-term up move, and we could see a correction later on.
Okay, fair enough. Right, Mr. Shah, if you could also come in on the IT pack, any particular names that you can spot from the entire IT basket which look positive on the charts?
Yeah. So if you see the if you see the IT index now, IT index post that fall from 33,500 in September to almost 30,000 in the last week of October. The index is already retraced more than 61% of that entire fall. And it is now trading at its crucial support zone, which is around 32,100, 32,200. So till the time this zone is held, I feel the short-term momentum kind of trade is on the upside for the IT index, and we could see higher levels of 30.
That you would like to suggest from the large cap IT names?
Yeah, from the large cap IT, HCL Tech would be my preferred choice, because if you see that stock on the daily, weekly, and monthly charts, we are seeing a higher top, higher bottom formation also, and as well as while IT index is below its mid-September swing highs, HCL Tech today has crossed those swing highs, and it's now outperforming the major IT index also. So I feel from the current levels, HCL Tech could be bought with a 1300 stop loss and 1360, 1370 target on the upside. Maybe even more higher if IT index itself supports this up move. But at least with a 1300 stop loss, this could be bought.
Okay. Mr. Balika, the other space that I wanted to draw your attention to is the entire healthcare pack. The pharma stocks, the Nifty Pharma is again at a 52-week high level as well.
Right.
And we are seeing a lot of momentum come in on these stocks after a fairly long time, be it the main pharma stocks, stocks like Oro Pharma, Lupin, for example, they're coming up in trade. Or maybe the diagnostic majors like Divis Labs, Dr. Lal Path Labs, they've started to move. Even the hospital stocks like Apollo Hospitals are doing well at this point in time. How would you look at this entire basket, and which segment really gives you more promising outlook?
See, if you look at the entire basket, I think as far as the pharma companies are concerned, I'm not talking of the hospital chains or the diagnostic labs, but the actual pharma companies, they have in fact come out of the long-term bear sort of market since the last like 8, 9 months, and we have seen a very decent move. I think this will continue at least in the foreseeable future. So overall, if you're talking of the healthcare space, I'm quite positive, except for the diagnostic space where I think margins could still be under pressure because the sort of I mean the competition out there is still increasing quite a lot, and some large majors are also coming in. So because of which diagnostic space, I would be a bit careful. But if you're talking of the pharma companies as well as the hospital chains, I think that's I mean it is still time to buy. So here, in fact, I would still recommend, I mean, stocks like Alembic. I would recommend stocks like Lupin, Sun Pharma,
Okay.
which have been, I mean, where we have seen a decent move. Narana Hrudayalaya is the other one in the hospital space. Apollo Hospitals, I think, will still see some more up move from here.
Okay, Alembic Pharma, Lupin, Sun Pharma, Narayana Hrudayalaya, some of the top stocks from the pharma basket that investors can keep on their radar. Mr. Shah, anything from this basket that also looks attractive on the charts?
I concur with Narayana Rudralaya. That stock looks good from the mid cap space. From the large caps, Sun Pharma and Cipla has given a breakout, multi-month breakout. So I feel Cipla can be looked upon from the current levels also with a stop loss of 1220 and an upside potential up to 1280, 1290. While if you see Sun Pharma, then Sun Pharma also is looking bullish with 1160, 1170 as a base support. And I feel this up move could continue in Sun Pharma up to 1230, 1240, and we could be in a newer trajectory for these pharma names from here on also.
Okay, I want to shift gears and I wanted to talk about the primary market space as well. 5 IPOs listed for this entire week. Mr. Balika, anything that looks attractive to you? There is Tata Technologies, the first one after 20 years from the Tata stable. We also have the first government PSU IRADA after LIC that's going to be listing at a very attractive price point of just 32 rupees odd or so. Now, Gandhar Oil, Fed Bank Financial Services, Flair Writing, we have a flurry of them. How are you looking at this entire IPO space and where do you see promise?
I think all of them can be applied for because I mean none of them I see them as extremely expensive. But I mean if you ask me which is my preference, clearly Tata Technologies would be on number one. IRED, I mean your Indian Renewable Energy Development Agency, that would
Yeah.
be the second one. Gandhar Oil would be the third one, and the last two would be Fed Bank and Fair Writing. But if one has funds available, I think one should apply for all these five.
Fair enough. Since you talked about your first preference as Tata Tech, and that's where the most of the anticipation is, and most investors are waiting for this IPO and to apply for this IPO as well. Now, I remember when we were discussing about it much earlier, when the news had just started to float that perhaps this IPO is in the offing. We were talking about how Tata Motors, the parent company, could be in for a fairly good amount of traction ahead of Tata Tech IPO. Now,
Right.
what we are seeing as a very, very interesting move in the last just couple of days is Tata investment shares, the way they have shot up ahead of this IPO, 41% odd or so. That surprised a lot of investors as well. Help me understand, how are you looking at these promoters and holding companies in view of the Tata Tech IPO, and how would you advise investors to move ahead in the parent companies and the holding companies here? What explains the sharp rise in Tata investment versus the muted performance on Tata Motors?
See, as far as Tata Motors is concerned, look at the size of Tata Motors and the investment which they have in Tata Technologies. It will hardly move the needle for them. So, but it is sentimentally it's positive, because of which we have seen some move in Tata Motors. But then the move in Tata Motors is more due to the performance of the company and not because of the holding in Tata Technologies. So I don't think that's going to make too much of a difference for them. But Tata Investment clearly is an investment vehicle. So, I mean, as far as Tata Investment is concerned, yes, it makes sense. But then, from a Tata Motors perspective, other than the sentimentally positive thing which is there because of the shares which the Tata Motors shareholders will get as retail shareholders. I think that's the only positive which is there.
Okay, but at this point in time, would you be comfortable looking at an fresh investments going into either of the companies in view of the IPO coming up?
No, from an IPO perspective, I don't think one should take a call on Tata Motors. Tata Motors, you should take a call basically based on the performance, and I think the performance has been extremely good. And even going ahead, clearly I see, the stock moving up. I think based on the performance and not because of Tata Technologies.
Okay. Mr. Shah, I'd also bring you in on Tata investment. How do you analyze the strong move that we've seen in just a couple of days, 41% in just 2 sessions, and extended gains of 47% odd or so in the last 1 month odd or so? Of course, it is a slightly, expensive share for an average retail investor, 44.81 kind of, levels being seen here. But your own sense of how would you look at this stock? Sudeep, could you unmute yourself, please?
Yeah, sorry. So
Yeah.
until September 2022, the stock was trading in a range between 1200 and 1500, and suddenly we saw this entire move from 2000 to 2400 in the month of first half of 2023, and the stock was still consolidating. But when this IPO news has come out, and suddenly we have seen the stock shooting up till 4500, 4550, it's a long-term breakout. For sure, for investors, it is still a good bet, even though the stock has moved up 30, 35, 40% in the last couple of days. But I feel since the IPO is still about to come, and around listing also, we could see some kind of gains up to, say, the stock could move up to 4800, 5000 levels. And but my only worry would be that from the current levels, one should not be too aggressive. If one is trying to dabble small quantities, and trying to add on dips, it is absolutely fine. But if someone is just trading for another 10% move on the upside, then it could be a bit of a risky affair, because the stock is already short of 40-45%, and it is very easy for this stock to even give away 8-10% because of the kind of the liquidity that is behind this stock. So I feel from a trader's perspective, one should avoid. But from an investment standpoint, if someone wants to add, one can keep adding on dips from a medium to long term perspective.
Fair enough. All right, Mr. Palika, let me take the new age tech basket with you. We've seen substantial increase in Zomato and Paytm as well, and we've discussed this space quite a lot. Last few trading sessions, we've also seen Nykaa play catch up as well. How are you looking at this entire internet stocks basket, and where would you really throw your weight behind if you have to take a long-term view looking at the improved fundamentals of these companies, sir?
When you look at the new age stocks, I would possibly discuss 4 of them, including delivery, other than the names which you have mentioned. Sure. So I think looking at Paytm, Zomato, and delivery, their performance has been improving, and clearly, on the way to show profits. Zomato anyway is clearly showing that. But I think as far as Paytm is concerned, I think we should clearly see, a profitability by FY25. Delivery also has confirmed that. So I think these are the 3 stocks which should be there in the buying list. Zomato should be on number 1, and I would surely look at buying Zomato on a correction. Delivery, even at the current levels, I think it makes sense. And Paytm also, one should look at buying on a correction. When you talk of Nykaa, I am still wondering as to why it has shot up so much in the last few days. Because whatever said and done, I think the IPO had come on the premise that it's a profitable company among all the new age stocks. But then, what are the profits we're talking of? It's very small compared to the market cap, and we have not really seen the profitability moving up in line with the revenue growth. So I think there's a lot of disappointment as far as Nykaa is concerned. I don't see that improving. Anytime soon. So I won't really look to buy Nykaa. I'll give it a pass.
Okay, give it a pass at this point in time. All right. Sudeep, let me take a few stocks with you. All these stocks are in momentum right now. So help us with your next targets and stop losses on these stocks, purely on a trading and a short to medium term, maybe positional trade perspective as well. The first stock I'll take with you is Patil. The stock has hit an all-time high today. In fact, they're now trading at around 557 odd. The stock has been in momentum this entire year so far. It's doubled investors' wealth as well. 101% increase is what we've seen already. The stock is in double digits today as well, 10.5% higher. How would you look at Patil?
Purely, purely from a trading perspective, I feel that Patil should still warrants a buy from current levels also. Because if you see, the stock has been consolidating between 460 and 520 since 10th of October. And now, after so many days, we have seen a big breakout backed with volumes. So from the current level also, if someone is a trader and wishes to take a punt from here on, then 530 could be a stop loss, and 600, 610 targets can be seen in these stock. Because if you see the entire real estate space, whether small cap, mid cap, or kind of a semi-large cap, every stock is showing good action, and we are seeing some accumulation as well as a lot of breakouts also are visible in a lot of counters. So I feel this is the time for these real estate stocks to move on, and this particular name can be added on dips.
Okay. Next stock is GE Power. Again, this stock has hit an all-time high level. It's in the green zone for the 6th consecutive day, and the stock has also gained about 65 odd % this year so far. Again, GE Power today, the stock is up over 7.5% in trade. What would be the next target?
This stock also, if you see, the stock was consolidating since mid-July between almost a level of 160, 165 and 195. So yesterday we saw a big breakout backed with volumes. Today a follow-up move is being visible. And with this, the stock is also holding its key moving averages, plus on daily, weekly, monthly timeframes, it is showing bullish signs. I feel the next target on the upside for this stock could be around 265, 270. And one can buy fresh or hold on their current positions with a stop loss of 212.
All right. The next stock coming your way is SML Isuzu. The stock has hit a 52-week high level today, and the stock is again in green after a day's lapse. It's gained in 4 out of the last 5 trading sessions odd or so. We've also seen the stock gain about 82% odd in trade. How would you look at this fresh upside that you're looking at? 13% now higher in trade, 1543 being seen. Of course, this is 52-week high level.
Yes, and not only 52-week high, it's at a 7-8 year high levels.
Multi-year high.
Yeah, it's at a multi-year high. So, see, if you see since 2016, this levels have never been seen, and kind of a fresh multi-year breakout with huge volumes, and kind of in the last 3-4 months, it has consolidated in a wide band of 1200 to 1400, 1430. So I feel from the current levels also, post this breakout back volumes, the stock can be added on dips, and with all these auto ancillary names moving, I feel this stock can continue its up move up to 1700, 1750 in the next few weeks, and the stop loss or the support for the same would be around 1470, 1475 on the downside.
Okay, fair enough. Let's get back to Mr. Balika as well. Mr. Balika, I wanted to understand from you, you were definitely mentioning how large caps are a better bet in this kind of a market because they look better valued at this point in time.
Right.
But in case one still has to go ahead with the mid and the small cap space, where is a safe zone? Where do you see margin of safety even now despite the kind of move that we've seen?
I would say one should look at the specialty chemical space, where in fact in the second quarter earnings, what we've seen is some sort of bottoming down, out of the margins, and we've seen margin improvement. So that's one space where I think one can be investing at this point of time, because most of the stocks have corrected and they have not moved up much from the lower levels.
Okay. All right, another space that I wanted to discuss with you, sir, Mr. Balika, was the hotel space. Today, a lot of hotel names are doing very well. EIH, Chalet Hotels, that's up in trade as well in trade. Today, Indian Hotels, that's up in trade. In the F&O basket also, the stock is buzzing in trade. We've definitely seen good periods of these stocks really moving higher in trade. But is this a story one should be really tracking for the long term? Is it good enough entry point for them? For say somebody looking at a 2-3 year time frame, is it a good entry point?
See, I mean, most of the hotel stocks have moved up because of World Cup final rates. I mean, the sort of prices which we have seen, and I don't think, those sort of room tariffs you can see anytime in near future. So from that point of view, one should not be buying. But then, if you're talking of a slightly longer term, if you're talking of the next 1 to 2 years, I think the hotel sector is on extremely good wicket, because what we have seen in the last, close to a year and a half, that the average room rents have actually moved up after a gap of 10 years, and they are sustainable at these higher levels. And the sort of occupancy which we see is extremely good for most of the hotel companies. So, from a longer term perspective, yes, one should be buying. But then we have seen these stocks move up just because of the World Cup in the recent past. So let that cool off a bit, and that's the time to start buying into the hotel companies. And my best pick here is Indian Hotels, where
Okay.
again possibly I'll wait for levels of about closer to 395, 400 than the current level.
Okay, Indian Hotels as the top pick. Sudeep, throw your top pick from the hotel space with us. Any particular stock that is looking very good on charts?
Two stocks. The first one would be Indian Hotels. I agree. That's a good stock from the current levels, and a lot of accumulation has already happened here. So the stock has been in this range, say between 430 and 380 since last 3.5 to 4 months. So dips to 400, 410 would be a very good entry point for this stock. The next stock which I'm very bullish on is Chalet Hotels. Now, if you
Okay.
see, the stock has been on a complete uptrend since April 2023, right from 340 till 620. It has been consolidating in the last 1.5 months between 540 and 600, 620. And today, what we are seeing is kind of a fresh mini breakout with volumes. The stock in the last 10 days, despite the consolidation, has never broken 20-day exponential moving average. And today also, it has taken support from that zone and rebounded back, and it's now up 3%. So I feel from the current levels that can be bought with 580 as a stop loss. And upside levels, what I'm looking at is around 630, 645 in the next few sessions to come.
Fair enough. Well, thank you so much for that update. Mr. Balika, I'll come to you for the last one question, and that will be on the power finances, which I've discussed with you even before as a theme. Again, we are looking at these PFC, RSE names coming up again, and of course, you did talk about your second top preference in the IPO space, the IR EDA, which will also look to compete within the same zone as well. Energy basket, again, we did see Coal India, NTPC again moving up in trade. How are you looking at this entire energy basket now, PFC, REC especially?
When you're talking of PFC and REC, I think we have seen extremely good move at these levels. I think it's more or less fully priced. In fact, I'll not be buying fresh at this point of time, but possibly
Okay.
holding on to investments. Coal India, I feel there can be a bit more of an up move from here, but not too much. We have already seen a very decent move in the last, 4 or 5 months. I don't see the stock going up by more than another 25, 30 rupees more from here. And anyway, there has been a good dividend also, which is due. So post that, I don't see a major move up. And when we talk of the power companies, I'm still bullish on stocks like NTPC and Tata Power. Tata Power, even at the current levels, I would suggest a buy, because from here, you can still see an upside of about 25-30%.
Oh, okay. Tata Power as one of the preferred stocks, again from the power basket right there. I'll squeeze in one small question to you, Sudeep, before we go to the closing again. And that will be on the auto space stocks, which are now under pressure. But through the morning trade, we did see some of these two-wheeler names like Hero, Moto, Eicher, Bajaj Auto really coming up in trade again. How are you looking at the entire auto space? Any particular stocks that come up on your charts that look positive?
See, within the auto space, a couple of names that are now coming back on radar is the first one is Maruti. within the four-wheelers. Now, if you see, the Maruti has been consolidating between 10,200 and 400 within the last 7-8.
Okay, I think there is a technical glitch there, but many thanks, Sudeep, for giving us your time. I think we're running out of time and we have to go to the closing. Mr. Baliga, thank you so much for sparing time and explaining to us all the valuable insights. As always, great to have you with us on Business Today TV. Let's quickly go on to the market closing and wrap up the markets for you. Of course, a lackluster day of trade. We're now seeing the Nifty below 19,700 odd mark. We'll have to see whether in the closing few seconds it manages to climb up above 19,700 again. But right now, 0.2% of a decline for this one. Nifty Bank has been very, very volatile. It still remains so. Now slipping into the red zone as well. And the clear culprits being the private banks today, the financial services that have dragged down the index lower in trade. As far as the top laggards on the Nifty is concerned, the stocks that did not contribute to the trade today, Adani Enterprises down in trade, Bajaj Finance, Mahindra and Mahindra, SBI Life Insurance, Ultratech Cement, Bajaj Finserv, Tata Motors, Adani Ports. So some of those Adani stocks also not participating in trade. HUL, UPL, metal stocks like Tata Steel and JSW Steel down in trade. On the other hand, we did see stocks like Divis Laboratories performing, Bharti Airtel coming up towards the last half an hour of trade. We did see, of course, the entire IT pack, Wipro, HCL Technologies, Infosys, even Tech Mahindra, LTI, Mindtree coming up in trade. Now TCS as well moving up towards the top 5-10 gainers in trade today. Coal India from the energy basket, definitely a top mover. And we did see stocks like Titan and Kotak Mahindra Bank also moving up in trade. Let's talk about the Nifty 500 basket, where we did see some substantial moves coming in. Contrary to the move between the parent company, Adani Wilmar came up in trade today from the Nifty 500 basket. One of the top gainers here, 6% higher for this one. Cyient also moved up 6% higher in trade. Hotel stocks like EIH and Chalet Hotels moving up in trade. Abbas Finances, GSK Pharma. We also had Nykaa, CSB Bank, Angel One, Bikaji Foods, Ajanta Pharma, some of the other movers from the Nifty 500 basket. From the F&O space, Indus Towers was the one that moved up higher in trade. So you did see both Indus Towers, Bharti Airtel moving up in trade, 6% higher or 3% higher for Indus Towers today. PFC, REC, both top movers in the F&O basket again. SBI Cards, Rampur Chini, City Union Bank, the other movers as far as the F&O action is concerned. Sectorally, the Nifty IT remained the top mover in the pack, 0.5% higher in trade. Consumer durables followed with gains coming in on PSU banks as well. And the mid caps managed to sustain above the green level as far as the broader market action is concerned. Mixed trade in the broader market, small caps slipping into the red, while the mid cap 100 index managing to eke out some gains, about 0.1% odd or so. So that's as far as the markets are concerned for you. We have the closing tick 19,694, so we have slipped below the 19,700 mark. We'll have to see whether fresh energy comes into the market into tomorrow's trading session as well, and we'll have to root through the US markets and cues from the global markets to see whether there is any fresh trigger that comes up. But just like how our market experts have been pointing out, that the markets may remain volatile until and unless we do see some election results come in the early part of December. So till that time, a wait and watch mode and a very, very stock specific approach is what they have been warranting. We'll leave you at that, but many thanks for tuning in onto the closing action on our Market Today on Business Today Television. Do stay tuned on to Business Today TV for catching all the world updates from the world of business and stock markets.
Ever wondered what if the Apollo moon landing wasn't the triumph we believed?
Good evening, my fellow Americans. Fate has ordained that the men who went to the moon to explore in peace will stay on the moon to rest in peace. They will be mourned by their nation.
In an alternate universe, technology resurrects US President Richard Nixon.
These brave men, Neil Armstrong and Edwin Aldrin, know that there is no hope for their recovery.
He spills a lunar secret. celebrated astronomers Neil Armstrong and Edwin Aldrin.